That's it. All yours. I'll turn myself off.
I've got the chat open as well, so I'm keeping up to date with any questions you have in the chat box. So we're a bit rusty with these, so apologies, because you have to have multiple windows open, not only for what we're trying to show, but also on the chat as well on YouTube. So do bear with us, we're a bit slow. I'm going to share my screen over here, which is that one, which hopefully you can see. Okay, this is a very, this is going to the other end of the spectrum in terms of time, because what I've got here is I've got the top level is 30-second. This is for Aussie dollar. Sorry, I beg your pardon, pound Aussie. This is 30-second, which may horrify some of you, but I can assure you VPA works in exactly the same way, whether you're on a daily chart or whether you're on a 30-second chart as there. 1 minute in the middle and 2 minute over here. And then at the bottom, those time frames are replicated. So exactly the same. And the reason I've done that is because what I actually want to show you, perhaps let's have a look at the 2 minute here, because I just want to really focus on one indicator today. And I will just show you some anomalies, some very simple VPA anomalies, which give you the essentials of what VPA is all about. But let's focus first of all with this indicator, which is called the VRSI. We have a whole raft of volume-based indicators, as you would imagine. It's called the VRSI, which stands for the Volume Relative Strength Indicator. And in essence, that's what it is. It is looking at the relative nature of volume from one bar to another, and it is visually representing that as, if you like, energy in the move. So it brings in this whole idea of momentum, of strength, because when you're in a trend, you want to see that strength, that momentum. Now, momentum is visually represented in many different ways. It appears in terms of candle spreads. If you're in a price waterfall and candle spreads are widening, then that is significant. It's evidence of momentum in itself without any reference to volume. You then bring volume in, and if you've got a falling market with widening spreads and rising volume, it's pretty clear that you have significant momentum, not only through the prism of price, but through the prism of volume. And if the two match up, it's just confirming that it's a great trend. It has momentum. It's moving quickly. And of course, the nice thing with downtrends is they always move much more quickly than they do than price moves to the upside. The reason for that is because market makers, the insiders, are in a hurry. They want to frighten the market to death because they want to go back to the warehouse analogy. They want to fill their warehouses fast. The market is crashed. Everyone panics. They sell in panic. The market makers clean up, and then the trend higher starts, and they take their profits in a more measured, even-paced way. And that, in a simple nutshell, is what happens, and is why markets fall dramatically and rise far less dramatically. So what the VRSI indicator does, and you can see it's very, very simple, it's color-coded, and the beauty of it is that it reflects many of the same principles that we use in pure VPA. And by that I mean, what we're looking at here, and this is an example, we've got a rising trend and we've got rising heights on the VRSI. In other words, we are seeing increasing strength developing in that momentum. And they will appear as brighter colors. And then, as you would expect, as the market starts to top out and we start to see some weakness coming into that trend, they start to diminish, they decline. So the momentum has now completely vanished or disappeared almost completely from this very strong uptrend denoted by increasing height of these volume bars. And then as that momentum gradually wanes and completely disappears at the bottom here, it falls away and the height of the bars decreases. So we look at two things. We're looking at heights of bars. We're also looking at the relative nature of these bars, which is exactly the same principle we use when we're looking at whether a trend is going to increase as it moves higher, we want to see rising volume in a moving trend higher. Equally, in a move lower, we want to see the same thing. We want to see rising volume, as we saw here. So as this reversal in trend gets underway, so we see the same effect here. We see the bright blue bars rising. They're increasing in height. They're delivering further confirmation that this is a trend that has got some momentum to it. Then as that momentum dissipates again and we move into congestion, what's interesting is that, as you would expect, the fulcrum line in the middle here is it's the seesaw. It's, imagine the seesaw. You've got a seesaw, you've got two people, and as sentiment moves between overbought and oversold, that seesaw oscillates around the fulcrum, the central point, which is here. Exactly the same principle. What's interesting in this move, which is why I wanted to show it particularly, is whilst that momentum in the move has certainly diminished somewhat by virtue of the change in color and also by a reduction in the height of the bars, it is still maintaining its position as bearish sentiment. We haven't yet moved to a state where we could say, okay, now we're getting to potentially a point where we might be moving into a bullish reversal. So what we're seeing at the moment, what we're witnessing, is a continuation of that bearish sentiment. And what the VRSI does for you, I know in some of the comments you say, VPA is complicated, you're struggling with it. And as I said, a great way to practice and to learn is to use for these fast time frames, because everything unfolds very quickly. But the reason we also developed this indicator, it's a complementary indicator to the whole volume price analysis methodology, which is why I've laid this workspace out in this way, because what you're seeing here on the top line is the VRSI, and on the bottom line here, you've got our conventional volume price analysis with nothing else on this chart, just volume, just price, and that's it. And just picking up one or two very, very simple ideas of VPA, our eye is always drawn to the high points. So if we look at this volume bar here, for example, what exactly is going on in that candle? Well, the market's trying to rally, isn't it? The market is trying to rise, and yet in the space of 3 candles, we've gone from a spread of this associated with that amount of volume. In other words, we can call that our benchmark. And then we get a dramatic increase in volume, and yet the spread is almost half. So what does that indicate? What does that signal to you? Well, it signals the market's struggling. The market makers are trying to sell into weakness. The market is not receptive to that price move, and therefore you're anticipating one of two things, congestion or reversal, which is what we get. And then we get another very simple VPA example here. This is VPA 101. Market comes down. We get a widespread candle on this volume, and then we get a narrow spread candle on this amount of volume. What does that indicate? Very, very simple. It's buying. It has to be buying. And that is the beauty of VPA. It is very, very simple. Now, there's a lot more nuances to that, but that, in a nutshell, is really what we're looking for. We are looking for confirmation that volume and price are in agreement, what Wyckoff called cause and effect, or, effort and result. In other words, does the effort that is going in match the result that we see on the price chart? If it is, fantastic, we carry on. If not, we go and analyze it and find out why. And part of that analysis is looking at multiple timeframes, which is why we have all these multiple timeframes here. Now, to go to the 30-second chart, you might be horrified. You may be, you may not be. But I can assure you, volume price analysis works in exactly the same way. We get all the variation in the heights of the candles. And laying it out in this way gives us the opportunity to use the indicator, which is the VRSI indicator. Just pull that up there. It's disappeared off the bottom. There we are. We're starting to get a little bit of a reversal. And as always, 3 charts is an absolute bare minimum for anything. Excuse me. Hold on a minute. I'm just going to mute myself off. I've just got a frog in my throat. If I can navigate my way back to Zoom. There we go. There we go. Just sorry about that. There we go. So this is a really nice layout. We've got 3 charts at the top and we've got 3 time frames at the bottom. That is the absolute bare minimum. You should have whatever you're doing. because what we're seeing at the moment is potentially, and I use the word cautiously, we are starting to see on our 30-second, we've had this little bit of confirmation of bearish. Now we've come out of that, the volume bars have fallen away, and we've now reverted into bright yellow. Now, bright yellow signifies momentum. It's also signified by the fact that we've got rising candles here, a rising VRSI bars. In other words, the height is increasing there. Now, if that trend is going to develop into anything more meaningful, what we should then expect to see is gradually these come down to the fulcrum in the 1 minute, these volume bars here, and come down to the fulcrum in the 1 minute, and ultimately through into maybe a darker yellow and ultimately through into bright yellow, and equally up onto our 2-minute chart, exactly the same principle, down into down to the fulcrum, and then through to the other side, if indeed this is a true change in trend. And if we go down and look at our VPA down here at the bottom, what have we got? Well, we've got some little signals that we're going to see a bounce. Why? Very clear. We had the move down here. That volume was, let's say, in agreement with that candle, and then we had the same amount of volume with a tiny little candle here, little wick, little effort to rise. Buying here, supported, wick to the lower body. We're starting to see this push up. Now, if we were going to jump on that trade, the things that we will be very conscious of are the fact that we've got, going back to what Anna was talking about, levels. Let's talk about levels intraday. We've got some pretty stiff resistance ahead, not far ahead. So if we're going to take that trade, that will be our number one priority. We'd be looking at that in 2 minutes. We'd maybe go and look at it in 5 minutes. We'd be up and down the charts and taking a much, much closer look at that and see how we're going. But you can see here, we've got a very, very nice trend developing here, helped by our VRSI indicator. It's rising height of the bars here, signaling nice momentum there. And ultimately, if that continues, we will see it develop into our 1 minute and across into our 2 minutes. So a really nice little example. And of course, if you're an out-and-out scalping trader, we've got a lovely 2-bar reversal here. We could jump on that straight away as it starts to develop, and we could take 10, 15 pips out the market very easily, no problem at all, no great stress. And you can see the yellow is now starting to develop over on 1 and out. Ultimately, if it develops into a strong trend, it will pass through onto our 2-minute time frame. So that's the VRSI indicator. I would urge you to use it in this way because I think it's a great way of seeing both volume and price very cleanly on your chart down here, and then you have your VRSI up here as well. And of course, with if you are on the higher levels of trading view, you can have 6, you can have 8, you can have even more. But I usually use 6 or 8. 8 is maximum, but 6 is a nice layout. And if you're not using an indicator like this to spread it, then you can have 31, 2, I'd have 3, 5, and maybe a daily over here for context. So I'd have a complete array there. And you can just see now we seem to have peaked a little bit. We've got a 2-bar reversal come in, and the height of the bars here not only has changed color, but it's now also dropping a little bit. So this trend, this little mini trend that we had here, which would only be of interest to you as an out-and-out, a smash and grab scalping trader, now it's starting to weaken a little bit. It doesn't automatically mean we're going to go back down to the fulcrum, but it certainly has run out of steam. No great surprise because the whole thing is fairly bearish at the moment. Let's go